Another Evergrande failure. Let's have a look. Hello everyone, Florian.heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee, I don't have mine at the moment, and I want to have a look at this article from Yahoo Finance discussing, well, the failed attempt at Evergrande to sell their headquarters. It's just not stacking up for that property developer, is it? So, Chinese state-owned Yanyu Property, I'm sure I butchered that, has pulled out of a proposed US $1.7 billion deal to buy China Evergrande Group's Hong Kong headquarters building over worries about the developer's dire financial situation, two sources say. Well, maybe they can wait and get it at a much better deal. The collapse of the talks for the landmark building sale is another setback for crash-strapped Evergrande, which has been scrambling to divest some assets to repay creditors knocking on its doors. With more than $300 billion in liabilities, it has already missed 3 rounds of interest payments on its international bonds. So they are based in the southern city of Guangzhou, who was close to sealing a deal in August to acquire the 26-story China Evergrande Center in Hong Kong's Wang Chai district that serves as Evergrande's local headquarters, the sources say. However, the deal faltered after Yixiao's board opposed the move over worries that Evergrande's unresolved indebtedness would create potential complications in completing the transaction smoothly, they said. And that certainly makes sense. Once China's top-selling developer, Xinjiang-based Evergrande has in recent months sought to raise funds by offloading assets from properties to stakeholders in subsidiaries, both in mainland China and in Hong Kong. Evergrande, which saw its 8.75% June 2025 bond fall more than 6% to 18.625 cents on Friday, did not respond to requests for comments, nor did the other developer. The sources declined to be identified due to confidentiality constraints. Evergrande bought the Harbourside building, which is located in Hong Kong's commercial and nightlife district and covers an area of 345,000 square feet, from local peer Chinese estate holdings for Hong Kong, or US $1.61 billion in 2015. The deal set a record for a single transaction of a commercial building in the Asian financial hub, with the highest price per square foot at the time. It also made the property Evergrande's single largest asset in the city. Evergrande has financed the bulk of the transaction with securitized products worth more than 10 billion Hong Kong, said one of the sources, which means it would only recoup limited cash from the sale of the building. The board of Yixiao, which focuses on property developments in China's Greater Bay Area and has a presence in Hong Kong, became concerned about the deal's certainty at a time when Evergrande's future is uncertain, said one of the sources. They also received guidance from the municipal government of the southern city of Guangzhou to put the purchase on hold at the end of August, said the person. A separate source familiar with the matter said the deal was halted in late August because the government wanted to review the overall financial situation of Evergrande first to better understand the use of proceeds from its assets disposals. The government did not respond to requests for comment. Separately, Evergrande is in final talks to sell a 51% stake in its property management arm, Evergrande Property Services, to domestic peer Hobson Development in a deal that could fetch about Hong Kong 20 billion, said two of the sources. One of them said both parties are finalizing details, including financing for the buyer. When asked about the deal, Hobson said any comments will have to wait until its announcement is made. The Hobson deal would be Evergrande's largest asset sale yet if it goes ahead. The struggling developer's other business interests include a bottle watering company and an electric vehicle maker. It is also close to selling its Guangzhou FC soccer stadium and surrounding residential projects to Guangzhou City Construction Investment Group, Reuters reported last month. So there we have it, everyone. The sale has flopped, but there are other sales. There are other sales in the pipeline. Let's have a talk about this one. So, there's a lot of fear, there's a lot of concern about Evergrande falling over. Now, is this going to be the next Lehman Brothers? Are people amping it up to stoke fear and get eyeballs? or which honestly, which is what I think is happening. There's going to be other businesses, other organizations that come in and swoop up the assets, and well, many of the holders of the US bonds and US debt from Evergrande, well, they've got to understand the risk they've taken. We'll have to see. It'll flow through to other parts of Chinese property. I think the concern is that, well, the sure thing, Chinese property sector might tip over, and then that will have widespread implications. We can only wait and see. As always, thanks for watching. Like, share, and subscribe to the channel. Let me know your thoughts and opinions on this one in the comments down below. If you're a fan and enjoy the content I find, there's a few ways you can support us. You can join us on YouTube or Patreon, sign up for SelfWealth or Stake, use our affiliate links at Amazon, eBay, Independent Reserve, or AussieBroadband, buy our merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, and I'll see you all next time. Bye for now.